Good morning, everyone. Welcome to our Q&A with David Morgan. It's my pleasure to be moderating or asking David some questions that some of us have come up to me and wanted to ask David, and some of my own. And my own background goes, I've known David for about 20 years now. David has been a huge influence in my own views on silver. I started buying silver when I was a teenager, and I found David really early on, back around 2000, and David really influenced me to buy a lot of silver back when it was several dollars an ounce. And today I continue to view silver as one of my favorite precious metals. And so I'd like to start off asking David, we hear a lot about Bitcoin, Zcash coin, Monero coin. What do you think about silver coins these days?
I'm so favorable to real money. I think a lot of silver coins. Are you talking about silver coins specifically, or are you talking about a crypto-backed silver coin?
Well,
you're not hearing me?
Is that better?
Are you hearing me now? I don't think these mics are on. Okay.
There we go. Okay.
Got it. Oh,
so let's start.
This thing. Okay.
Let's start off with just the silver market, the silver price, and the state of the silver market today. Where are we in this cycle, and do you see potential for silver to make a move this year? And also then let's talk about also maybe some silver-backed crypto ideas, if there are any.
Well, the silver market's been lackluster, to put it politely, for quite some time. The bottom occurred in December 2015. 2016 was a pretty good year. Luckily or skillfully, I timed that market perfectly. I think you really have to be able to trade this market somewhat. I have two categories of buy and hold stuff and stuff I trade. So 2017 was disappointing. I think it was pretty much flat for the year. Gold was up, I think, 10 or 11% year over year. But the bottom is in, and it's an underloved, underwatched market. So I really think 2018 will be a good year. I think it'll be a better year for the underlying equities, which it usually is. We're seeing a shift into the commodity sector overall. The ETF for base metals hit a 4-year high just about 3 months ago. So that, if you're really paying attention, and very few people are even aware of that fact, realize that the commodity sector is not dead, and it's probably going to increase over time. You've got, of course, a lot of pressure going with the mineral de jour, which is lithium, but the lithium situation is what it is. There's about 400 years with the lithium on the planet, so it's not as scarce as most people think. Most of the stuff out here, there's like 1 or 2 lithium companies I'd ever bother with, maybe 1, 2 at the most cobalt companies I'd ever bother with. But I'm off track, and you better ring me back. As far as coming back to silver, essential metal, irreplaceable, absolutely underloved. The market is much tighter than the price would indicate, and there's always new uses to be found. The EV market, electronic vehicle market, will put a higher demand on silver. Solar is probably going to peak out as far as demand on silver this year, but it will continue forward, probably around the 70 million ounces on an annual basis. On the crypto side, I'm not too favorable to some of the cryptocurrencies. I'm more favorable to commodity money, gold and silver, but I think there is a possibility for a marriage between the crypto, or the blockchain, and hard money. And that's already been attempted a couple of times, and I am aware of a company that is founded here in Vancouver. I met with last year after this show, in fact, and I have decided to participate myself. I'm letting it be known to my insiders, which are paid subscribers of the Morgan Report, and I will put it out to the free email list here shortly, and you can probably just Google and find it. But it's pretty early. It isn't up and running yet. It's probably 2 or 3 months away. We're doing everything right, got the best legal team going. We also have it vetted through what's called Crypto Valley, which is in one of the cantons in Switzerland, and probably have one of the best minds in the crypto space in Canada working with me. So, it's always, with me, you get the best effort. I won't say the best. I'd like to, but I'm not perfect. But when I'm wrong, I'll let you know. So If it's early on, I would suggest you just wait and see how well I do, and you might not get the return that I get, but you also have a lot less risk, but I'll leave it at that.
Okay, and so for this next phase in the silver price, do you see the initial price rising on industrial demand more than maybe hard asset demand? Because I think last year we saw a 10-year low in the Silver Eagle purchases. The silver investor has been a bit absent recently, so are they returning, or is it industrial first?
Well, all markets move at the margin. There's no doubt about it. So it's the last bidder at the auction that gets the car or the Rembrandt or the pocket knife. So the margin in silver is always on investment demand. And you're right, last year was the really poor year for investment demand. The overall industrial demand is important. It cannot be ignored. If you go back 20 years, the amount of silver used on industrial only was 35% of the market, and the market's production rate was about 60% of what it is now. Now the industrial demand is about 60% of the market, and the market is almost doubled as far as production rates from 20 years ago. So obviously industrial demand is quite a factor. Having said that, it's the last bidder at the auction, which means it's really the investment demand. The ideal format for silver is very interesting because there's a inelastic demand for most industrial processes because the amount of silver used for end product is so minuscule. If you have a $5,000 smart refrigerator and the amount of silver in there is like 1/10 of an ounce, at $10 silver you're looking at $1. At $100 silver you're looking at $10. At $1,000 silver you're looking at $100. So it's pricing elastic. In other words, they're always going to use that silver because the refrigerator costs so much more than the amount of silver required for the end product. That's what economists call price inelastic. It will always be used. So when you get to a point where industry needs silver and finds out the investors are taking the lion's share of it, there'll be a tug-of-war going on. And once one industrial use like Apple Computer decides they need to warehouse silver because it's always just-in-time inventory, there's going to be kind of a fight, if you want to use that terminology, between the investors saying, oh my God, silver's gone up to 120, and Apple just decided they wanted to buy X amount of silver and they're paying forward 140 in the forwards market. So now all of a sudden you got a floor of 140, and the investors go, oh my God, it's at 120, I'm jumping, So it's going to be one of those kind of situations. I really believe we're going to get there. Silver represents 0.02% of the world's wealth. Gold, I'm talking physical market now, represents about 0.8% of the world's wealth. If you go back to 1980, gold represented about 3% of the world's wealth. And so if we get gold back to that level, and we get silver back to a relationship to gold that's somewhere closer to, say, 30 to 1 or 20 to 1 or even 15 to 1, you can imagine what would happen to some of these underlying equities. So I still think, even without this scenario, I think we're going to see a great year. I think we'll see 2019 accelerate, 2020 to 21 probably the final acceleration phase. And since it's such a small market, it will really, really go. I mean, nothing, the old joke in the commodities market is nothing moves like beans or silver. And if you know anything about futures markets, silver and soybeans and anything can really move. But it's one of those commodities that you can store. You can't do that with agricultures. It's just different because when I started in the 70s, we just left the coinage market in 65. So when the futures markets opened, everyone thought, not everyone, but most of the people that played in the futures market thought of silver as money, because it was. But now if you ask anybody what silver is, they'll look at you like, I don't know, what crypto is that?
Yeah. Well, so on the topic of silver stocks, in this part of the cycle, do you invest more in the mining companies or is exploration have a lot of potential? It doesn't seem like silver companies have invested in expanding their deposits or renewing their reserves or resources. So what are the opportunities in the silver equity side in the next year to 2-3 years? Where do you like to invest?
Well, first of all, for the record, the Morgan Report looks at all minerals. So I just want that to be very clear. I'm not silver only. I mean, I made more money on a moly stock than I ever made in probably any of the silver stocks, and I made some pretty heavy money in a lot of silver miners. But in fact, we were first on the rare earth element space. Just so you know, I just want people to get a feel for what the Morgan Report does. But yeah, I like silver, and I spent a lot of time there. Right now, we were not interested in any way, shape, or form at all in any exploring companies, with the exception of maybe one, this hand with 3 figures left over. It was just not the right time. So we focused on producers, and it's a commodity. So you don't care if the silver comes from the moon, Argentina, Mexico, or Guadalajara. It does not matter. What matters is what is the margin for that company producing the same commodity. The futures market, the gold market, doesn't care where it came from. It doesn't care anything other than that commodity has reached the market. So you got to look for what companies produce it the best at the highest margin. That's pretty easy to do if you put your head on straight and think about it. Most of the companies that we are invested in are high-quality companies with our billion-dollar market caps or higher that have an end product that's based on a model that gives them a profit regardless of the price. And these are mostly streaming and royalty companies that compound at about 20%. So while everybody's griping about how much little money they're making, we're making money year over year over year over year. Is that true in every stock pick I make? No. But in most, yes. And then, of course, you look for the producers that have my favorite model, which are producing with an absolute increase in production capability ahead of them and further exploration potential. So that's where all my money has been for the last 2 years. As far as explorers goes, I'd be an idiot not to find the best of the best of the best, and that's what I'm all about. I never try to find an also-ran. When you go out to buy a new car, do you look for the worst car you can find at the cheapest price? No. You look for the best you can afford. When you go out to buy clothes, do you find something that's going to fall apart and threadbare? It's only a $99 suit, but I don't have to wear it 3 times? No. You get the absolute best that you can get. But when it comes to investing, people find the cheapest dirt cheap stock they can find with the most wild story you've ever heard in your life, and people continue to do this again and again and again. And I see these 80-year-olds out there walking around trying to find the great story that they heard for 400 times, and they're still broke. Cheap stocks are cheap for a reason. That's a fact.
And
so I stayed, so now I have to give my pitch. Do I ignore that sector? No. What do I have? I have one investment in one exploration company that came out with the results, and they drilled off. Let me say this so you can't find it on the internet and you could subscribe for $5. Would you pay me $500 to make 5,000? The answer is yes, but nobody does. But anyway, so this company drilled off 25 feet, over 50 ounces, not grams, ounces of silver, 1.7% copper, about 2% zinc, and I think 1.5% lead. And if you do that in your head, that's over $1,000 per ton. And I get pitched all day long, every day out here, about 1 gram gold per ton and what a great mine it's going to be. So let's think about this for a second. 1 gram of gold per ton is about $40, all right? And I just gave you a project that's the only junior that I hold as an exploration company at 1,000 ounces per ton. It's a commodity. Which one would you rather own? Do you want to buy a good business? You want to buy the best business? Or do you want to buy a bunch of stories? Because stories are great at the cocktail party.
Well, you have a team that researches all these different sectors, different metals, different stocks. So at the Morgan Report, you're going through these different opportunities. And so can you tell us a little bit more about the service that you provide at the Morgan Report?
Yeah, we're dead serious. I mean, last year I was at the speaker dinners after the Vancouver Resource Investment Conference. And 2 of the guys I knew, one was Frank Holmes. Frank kind of likes to hear my thinking and vice versa. And a couple other people. And there's one guy kind of off to the side, and he introduced himself. His first name's Michael. I won't give you his last name. And he started talking, and it was obvious he actually pays me something and gets my real research. And I was kind of flattered by it. And he goes, by the way, I'm a retired hedge fund manager. I said, well, that's kind of cool. He goes, yeah, I actually do what you do now. I look for real opportunities basically in the technology sector. And he goes, I don't think you know what you have. And I said, what do you mean? He says, well, the kind of research that you do, a hedge fund manager would be willing to pay $25,000 to $50,000 a year for. And so that was very flattering to me. But that's, you can think I'm lying, you think I'm joking, you think I'm making it up. I don't care. That's what he told me. So, we're very serious about it. Do we get it right 100% of the time? No. And I've been had by a couple Vancouver promoters, I'll admit that, but I didn't hurt anybody. And the reason I didn't hurt anybody is because those kind of situations, I always leave it as bet a little to win a lot, which means they're speculations. And I don't want anyone to get hurt. My big money's in big companies. These companies pay dividends. They can increase their dividends. They compound around 15, 20% a year. I mean, you go in the top tier list, which is my buy and hold list for, what I call lazy investors, and I've got nothing against anybody's personality. I just want to buy and hold. That's fine with me. And, you can write options on these companies. I got an options guy. It's one of the biggest options guys in the country to come on my mastermind service. And he looked over my portfolio and goes, you got one wild portfolio, wild meaning good. He goes, you got such betas, high volatility stocks, you can make 44% a year writing covered calls on the portfolio in the top tier of my portfolio. Not that you should do that, but that's an opportunity that we gave to our mastermind clients that were begging me to show them how they can make income by holding gold and silver stocks. So if you're serious, I'm serious. If you're not, you wasted your time here. But I certainly haven't wasted mine because I love telling people off once in a while. I don't get to rant too often. I know my fans, and I know that something set apart, from when I went in this business, I went in very naive. I had no idea of the kind of shenanigans that go on in the industry and the kind of reputations that most newsletter writers have. I've earned mine. I'm very underrated, underknown, and underappreciated. But that's my problem, not yours. So I think I'm about done. I've got a Kitco interview. You got one more question?
Sure. If you had to pick one commodity for this year, what would you be focusing on?
Another plug. I picked palladium last year, and I just cashed out for about a 45% increase. I did it in a physical market, and I loved it. I got some good friends that are pretty close in the physical market. As far as this year, it's a tough one because cobalt's already appreciated. I think lithium's overdone. Boy, I wish you should have asked me that yesterday so I could think about it. What market? Well, I think best percentage gain commodity. I'll go with silver. I mean, I probably shouldn't, but I think it's going to be a good year. I think we're going to see like 30%, maybe 40%. I don't know if we're going to see another cobalt or palladium. Platinum might be one. I think there's a spread trade available in platinum finally. I think you could, if you're long term, go short gold, long platinum. But that'd be somebody with patience.
As a silver investor, is there an opportunity to be buying last year's 2017 Silver Eagles? I picked a few up in December, and based off the low mintage, from a longer-term perspective, is there ways to make money off the premium of these lower mint?
Oh, yeah. I mean, we've got an expert right here. He's a good friend of mine. I mean, basically, a lot of people that were smart enough to put silver in their IRA would get a phone call from some of the better dealers saying, hey, you've got 3 monster boxes of 1986 Eagles, would you like to swap them out for 8 boxes? And the guy said, absolutely. Because some of these things absolutely get a premium on them because the mintages are so low. I've done that myself several times. Well, I won't lie, a few times. Also, what I've advocated is that you get a typeset, which means one coin of every year that has been minted. It's called a typeset. Every silver eagle looks identical to every other silver eagle except for the mintage date. Well, those mintages never go for ad infinitum. They go 20 years, 30 years, 40 years. You look at the peace dollar, you look at the Morgan dollar, they always end. So when the one ends with the current, what's really called the Silver Liberty, to be correct, will end, and if you have a collection of all of them, which means all the very scarce years, they'll be coveted by collectors, and you'll probably get a pop instantly. Richard, am I saying it about right? Generally speaking. He'll give me a small nod. He doesn't want any credit. But people like that taught me stuff that I didn't know. Look, I'm always learning. I always want to learn. I don't know everything, but what I do know is people invest too much money in crap and not enough good money in good stuff. And I want to help you do the best you possibly can. And believe me, the only reason I can say it with such authority is because I did such a crummy job between age 20 and 30 buying every story stock out there and losing my rear end. And I still haven't got much of one left, but at least I can walk. So.
All right, David, thank you for your insights and your time. To learn more about the Morgan Report, it's themorganreport.com. And you have a booth here, table as well?
36.
Okay, so have any more questions for David after this, or go by his table? And thank you, David, again for your time and your insights.